British American Tobacco, ticker BTI, is currently trading at $37.60 and is down by about 0.19% as of today. If we have a look at the maximum graph, we can see that the stock has experienced a large price decrease from the year 2017 to the year 2018. This price decrease was due to the US government passing out a law stating that goods containing tobacco would now have to contain less tobacco than they contained before. As we can see, this law has had a huge effect on the firm, and even though the stock is currently down by more than 50% from the year 2017, I believe that it's worth more than $37. Therefore, today I want to conduct an analysis of BTI and calculate its intrinsic value to find if it might be a buy. To do this, we will jump over to my stock analyzer tool where we will use the 9-pillar analysis and find the intrinsic value using the Grams formula revised, discounted cash flow model analysis, multiples valuation model, and the dividend discount model. If we have a look at the income statement, we can see that the total revenue has decreased by about 3.1% since 2021. We can also see that the gross profit has decreased as well by about 2.7%. The net income has decreased by more than 10% since 2021 to 2022 to about $8 billion. Now to the cash flow statement, we can see that the operating cash flow has decreased by almost 4%. The investing cash flow, though, has increased by almost 80% to a negative 872 million. The financing cash flow has increased as well by about 10% from 2021 to 2022. The net cash flow has increased by a staggering almost 300%, and this is mainly due to the increase in investing cash flow and financing cash flow. Free cash flow has decreased by about 3%, which is not surprising as the market has been experiencing quite a lot of difficulties in the past year. Here we can see the total assets, total liabilities, total equity, and the shares outstanding. The current dividend yield is about 8.87% and the cash per share is about $0.70 per share per quarter. Here we can see the analyst's target price is $53.57. Which I think is a bit too bullish, as I do not believe that BTI stocks can reach such a value in such a short period of time. Now we can jump over to our 9-pillar analysis, where first we want the 5-year PE ratio to be below 22.5, which it is. We also want for the 5-year profit margin to be above 10%. BTI has its profit margin above 80%, and the reason for this is that tobacco firms often grow their tobacco in less developed countries where the workforce is cheaper and therefore they can afford a higher profit margin. We further want there to be revenue and net income growth over the last 5 years, which there is, about 1.2%. We want there to be decreasing shares outstanding. I've explained this before because when you own a share of company and more people buy that company, the share of the company you own will gradually decrease, and this goes the other way around as well though. So if people sell the shares of the company, your ownership of the company slowly increases. Therefore you want there to be decreasing shares outstanding, which BTI currently does have, and since last year the shares decreased by about 1.31%. We want the long-term liabilities over the 5-year free cash flow to be below 5. This basically lets me as an investor know that the company has enough free cash flow to pay down its debt and not go bankrupt. We want there to be increasing free cash flow over the last 5 years. It's been increasing by about 5% every year for the past 5 years. We want the price to free cash flow over the last 5 years to be below 20. And this basically lets you know whether a company is over or undervalued. If it's over 20, it's overvalued. If it's under 20, it's undervalued. We can see that BTI is currently quite a bit undervalued. And we also want there to be consecutive dividend growth, which there is at about 1.28%. Now we can move to finding the intrinsic value. The first formula we will apply is the Grams formula revised. To calculate the intrinsic value using this formula, we will plug in the earnings per share and multiply the 5-year earnings growth estimate and the growth rate multiplier and the base PE by the earnings per share. We will then multiply that by 4.4, which is the average yield on AA core bonds, and divide everything by 4.6 to get an intrinsic value of $63.18, which is about 70% higher than the current price. suggesting that the stock may as well be undervalued quite a bit. Next, we will move to the discounted cash flow model analysis, where I have plugged in the free cash flow for the past 5 years and calculated the average growth to be about negative 0.5%. But as the analysts project a growth of 11.8%, and thanks to my own research that I did prior, I calculated the future growth rate of free cash flow to be about 2.67%. I then used this growth rate to project the free cash flow over the next 10 years and calculate the present value of this free cash flow. I then summed up all of this future free cash flow and added any cash and cash equivalents and subtracted any debt to get an equity value of $252 billion, which I divided by the current shares outstanding to get a discounted cash flow price per share of $113, which is quite a bit higher than the current price, again suggesting that the stock might indeed be undervalued. Next, we will look at the multiples valuation model. This valuation is based on comparing the firm we're analyzing to firms with similar structures. In this case, I chose to compare BTI to KHCMO, which are both tobacco companies, and MMM, which is a company operating in multiple sectors. Here we can see their current stock prices, which I divided by their current earnings per share to get the PE values of 19, 10, and 14, which I then averaged out to get an average PE ratio of 14.87. I then multiplied that by the earnings per share of BTI to get an intrinsic value of $52.33. Next, let's move to the dividend discount model. Here I plugged in the yearly dividend income for the 5 historical years from 2018 to 2020 and calculated the average percentage growth rate of about 1.28%. I then calculated next year's dividend, and using the WACC, I calculated an intrinsic value of $57.99. Now we can move to calculating the final intrinsic value of BTI. We do this by taking the intrinsic value we got from Graham's valuation, the multiples valuation, discounted cash flow valuation, and the DDM valuation, and we get an intrinsic value of $67.94. The difference between the current price and the intrinsic value we calculated is 81%, and although this might seem quite a high difference, let me show the maximum graph where if you have a close look, before the big fall, the stock was actually trading between $60 and $70, which is indeed the intrinsic value we calculated. Overall, I do believe that BTI is doing pretty well, but given the current market situation and the fact that S&P and Nasdaq are both down by about 1.5% since the last week, I'm waiting to buy BTI shares at about $36.5. Now, if you like this video, make sure to give me a like, make sure to subscribe, and make sure to comment in the comments if you're going to buy the stock and when you are planning to buy it.